It's crunch time for big tech, but will earnings justify the valuations? The market is riding a wave of AI optimism. Microsoft reached a $4 trillion valuation for the first time on Tuesday after it reached a deal to restructure OpenAI into a public benefit corporation. That gives Microsoft a 27% stake in the maker of ChatGPT. Microsoft reports after the bell, so do Google and Meta, and expectations could hardly be higher. Mabrouk Chetouan is head of global market strategy at Natixis. Mabrouk, we've heard a lot of worries in recent weeks that the AI boom risks inflating a bubble. What do investors want to hear later?
Well, we do believe that there is, no risk and no bubble on the tech and on the tech sector. We use, to hear, these concerns regarding an eventual bubble on this sector, but definitely, and each time we are positively surprised by, the earnings of this sector. And from a general perspective, when we look at the earnings season in the US, the Q3 was, pretty strong, and we have, clearly no doubt that these companies will benefit from this positive momentum in the US. And clearly, you said that we had, this company, reaching the group of, the 4 trillion, sorry, valuation, Microsoft, of course. And clearly, this is maybe not the end because we are attending to a kind of, reorganization of this sector, and maybe this is the beginning of a new trend for this sector, for this tech sector. So definitely, we are pretty confident on these earnings, let's say, seasoned earning weeks actually for the tech sector. And it will support the equity market definitely.
Isn't there a risk, though, that even a small disappointment could mean a big swing in the market, given how much of it is made up by just a small handful of tech companies?
Well, clearly, the expectations are quite high on this sector, but on the earnings side, no concern. What could be, a source of concern for the investors is probably the guidance. We need, to be extremely careful because the environment is quite uncertain. We don't know exactly what could be, the consequences over the long run of these trade war. These slowdown in the business cycle that we are, expecting from a global perspective. So clearly, the guidance will be extremely important for this earnings season this week. So again, from the earnings side per se, no concern, but the guidance will be extremely, monitored by the investors.
It is also, of course, decision day for the Fed, Mabrouk. A 25 basis point cut is seen as certain, but how dovish do you think policymakers will sound about the future?
Well, these decision is widely expected by everyone. So there is no surprise coming from the market. These 25 basis point rate cut are expected and anticipated by everyone, and clearly the market is also expecting more to come when it comes to monetary policy, U.S. monetary policy. We do believe that Jay Powell will remain dovish this evening in its statement because we don't have data coming from the key point. The key factor that drives the Fed decisions, the labor market. So this uncertainty will, in to a certain extent, force the chairman of the Fed to maintain an accommodative tone when it comes to its statement. And clearly, we are also convinced that these interest rates, decision are not the key topic that we need to focus on. Clearly, there is another point, which is the unconventional part of the monetary policy. And we do, of course, expect the Fed, to put an end to its QT and maybe announce some measures to support them in the monetary markets because we have seen some, disturbances, some disruptions in this market, and the Fed clearly wants to avoid any, financial troubles when it comes to the when it comes to the monetary markets. So again, an accommodative tone. More to come when it comes to the red cuts, and clearly something regarding the monetary markets.
Will we see much reaction in the bond market, do you think, to the end of QT, or will they take it in their stride?
Well, I think the end of the QT and maybe, the beginning of, let's say, not the QE, because we cannot talk about the QE, of course, but these measures that are expected to support them in the monetary market could be an excuse, to improve the transmission of the monetary policy to the long end of the yield curve. And so far, we have seen the long-term interest rates in the US, pretty, let's say, resisting to these, 4% threshold. And now with these, with these announcements, end of the QT plus some measures supporting, the monetary market and improving the transmission of the monetary policy, we are pretty confident that the long end of the yield curve will deliver for, bond holders and for the multi-asset also portfolios.
That was Mabrouk Chetouan of Natixis. Don't forget you can watch more videos on Reuters.com.